This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of February 14th, 2022, a week dominated by headlines, rumors of war, that sort of thing. Good $70 or so added to the price of COMEX gold as a sort of war premium. Those things don't typically hold as geopolitical events usually sort themselves out without some type of conflagration. Well, we'll see about this one. And the banks are betting on that as well. As we go through this week, the banks added something like 70,000 new contracts to COMEX gold, taking the short side against the specs. Now, back on Monday, February 14th, we did not have a podcast. I was traveling that day. And prices held in and maintained their rallies from late Friday, the 11th, when prices first perked up on these war fears. On Tuesday, it seemed temporarily like those fears were abating a little bit and prices fell. One of the things we looked at that day was the price of COMEX silver, as you can see on the chart. Two more charts. Silver on the daily chart, also an engulfing candle back down under that 2350 level that had offered resistance and has been kind of a key level for about the last, 3-4 months. Needs to hold its 50-day, which is 2292. Got to 2308 today. Otherwise, you'd say we'd probably run a risk of coming down to this little trend arrow here. Just because that's that low, and then you go up to the high where it tapped the 200-day and then back down. That's your second point a couple weeks ago, and now back up. So I'd say that is an area down there near 2230 or 2240 would be a logical dropping spot. And I'd also say that just because in that 5-day period, when all of a sudden we're getting 10,000 or so task trades a day in COMEX silver, that 5-day period is those 5 green candles before the 2 candles this week. All those days last week is when we got the almost exactly 50,000 contracts traded in traded settlement. Last Monday, we began that at 2250. In gold, in November and again in January, we got a full round trip back to that level earlier in the month when all that shenanigans started. So anyway, could certainly see a situation where by option expiration or contract expiration, we're back down here in this 2250 level. And again, I've told you, I think there's reason to be optimistic here in gold and silver too, but I'm not going to do anything with silver until we get the March contract off the board, and that's not till a week from Friday. Of course, we keep track about everything at TF Metals Report. We have to. If we're going to follow gold, we got to follow geopolitics, regular politics, macro issues, you name it. And one of the things, of course, we keep track of are the mining shares because many of us own mining shares. And on Wednesday, February the 16th, we had a very strong earnings report from Barrick Gold. So we also looked at the charts of Newmont and Agnico Eagle and may have found what looks to be a bargain in one of those. And that was all part of what we discussed on Wednesday the 16th. Here's a chart of Barrick. Okay, now this is no good. I mean, there's all kinds of red candles on here. And this takes you all the way back to the highs of August 2020. Okay, Barrick at that point was all the way up here at 31. And then the day that the vaccines were announced back in early November of 2020, it's up there at 29. And then in the rally early last summer in May, when gold got to 1920, it's up here at 25. It just keeps making all these lower highs until today. And look at this. Look at the 50-day moving average is starting to turn up. We give it enough time, the 50-day is going to cross the 200-day, and it's going to look like, hey, things are really turning around here. Now, it's got ways to go before we can say that. But this has some hope. This is where we start to see it first, okay, at the grassroots level like this. This is encouraging. So if Barrick is turning higher, what's Newmont doing? Well, Newmont doesn't have that same chart. Newmont last summer was making these fantastic highs up near 75 before falling all the way down to 53. But now it's up to 64, 65. Might have a chance to exceed 65, 66, those highs from last month. Resistance is up here in the upper 60s. But notice what's happening here. Remember I mentioned Barrick's 50-day moving up through the 200-day? Well, what do we see here? maybe tomorrow or the next day, you're going to get that bullish cross in Newmont. Newmont looks pretty good too. Okay, so what's the third largest mining company now? Oh, it's that combination of Agnico Eagle and Kirkland Lake. So if Goldcorp's chart is turning up, if Newmont's chart looks like it's already turned up and it has a bullish cross, well, then maybe Agnico Eagle. Nope. Well, that's interesting now, isn't it? First of all, knowing that it's now partially Kirkland Lake, and you know how much I and most of us here love Kirkland Lake, and all you see here is just nothing but lower highs. Kind of looks how gold or Barrick used to look, doesn't it? Certainly doesn't look like there's any pricing in yet of how great the combined company you would think would be here with Kirkland Lake, because Kirkland Lake was doing great. Remember when they last announced their drilling results a couple of weeks ago? All right, I tell you all this because, again, if these others are starting to turn higher, then you would think Agnico Eagle would too. Oh, and by the way, Agnico Eagle due to report their quarterly earnings next Wednesday, the 23rd. So maybe there's some possibilities here. I mean, if I were going to buy any of these three, this would be the one I'd be looking at. That's for sure. So I just thought I would put that out there, just as a little something that you might ponder. On Thursday, February 17th, it became clear that tensions were not simmering down in Ukraine, and we're getting ready now for a 3-day market holiday weekend. It's going to be a very volatile day on Friday. And for the first time since June of last year, gold traded above $1,900 per ounce. So we figured that was a good day to update the chart of COMEX Gold, and that was just one of the things we discussed. Again, Thursday, February 17th. Okay, here's 9 months of COMEX Gold showing the breakdown all the way back in June. The June FOMC when the Fed started paying interest on excess reserves, and you know the whole story. Anyway, we were about 1880 that day. Maybe slightly below there. And that's the level we got to back in November, and that's the level we finally blasted through today. As we discussed yesterday, there's these $40 ladders on the chart. The next one is very important, 1920. Not only because that's the highs, as you see in the upper left-hand corner of this chart from late May and early June, but the savvy observer will recall that 1920 was the previous all-time high from September 6th of 2011. So, I mean, you really want to, I know, again, it's geopolitics and all that kind of stuff, but if we rally again tomorrow and finish the week north of 1920, wow, that'd really be something. But let's not get to, I just would like to finish the week above 1880. What did we finish last week? 1860? So let's just see if we can hang in there through the day tomorrow. And on Friday, February the 18th, concerns over possible hostilities continue to grow in Eastern Europe ahead of a 3-day U.S. market holiday weekend. We're in for a very volatile session today. I would imagine prices for the precious metals will hang in there pretty well through the day, and we'll just see where we go come next week. Now, the banks have been adding a lot of open interest to COMEX Gold, something like 30,000 contracts just yesterday on Thursday, so they're definitely banking on things simmering down. And if things simmer down, price will probably fall backward too. Gold's up about $70 on these war concerns. What can't be taken away, though, is the action on the chart. The charts have been painted. Gold has now made a new higher high versus last November. And if things continue next week, it'll make a new higher high versus last May as well. What is definitely on the chart, though, are new higher lows, as you can see on this chart. So the trend is higher regardless of what happens geopolitically in the days ahead. Thank you for listening to the TF Metals Report podcast highlights. We'll have another one of these short videos for you next week.